patience is bitter, but its fruit is sweet. That's the quote I'm going to be using for ITC. ITC has hit its all-time high. It was above that 400 mark, that psychological mark of 400. I'm Vinnii Motiwala, and in this video, I will be taking you through the journey of ITC from becoming the most meme stock to the most loved stock. And is there still value in ITC? What are analysts talking about that as well? Let's talk about ITC's journey. It was, for the longest time, was the most meme stock. There were jokes like the government is actually contemplating demonetizing of 200 rupees banknotes and they're going to replace it with ITC. There are so many memes that were there for ITC through 2020, 2021 because for the longest time, the stock was just touched and had been at the 200 mark for the longest period of time. Now, ITC stock for the first time touched rupees 200 in 2013, and then for almost 5-7 years that it was just around those levels. There were just a couple of few exceptions in 2017-18 where the stock actually managed to jump up to the 300 mark, but again was back to those 200 levels, below those levels. Nothing exciting that happened in the stock for the longest period of time. But let's not forget now, because that's not the case, and patience has shown its virtue. The fruit is quite sweet and sweetened deal for all the ITC shareholders with ITC at 400 rupees. Now, the stock has doubled in almost just a year of time. When you look at it in the last 1 year, it's almost doubled as well, from around 240 to 50 levels to 400 is what ITC is trading at. ITC is among the top gainers in the Nifty FMCG index. When you look at it, this is on a YTD basis I'm talking about. Now, what are the positive triggers that have actually supported ITC? Let's start with, the businesses, the operational updates. How have that actually turned out for ITC? And in terms of operational metrics, is steady double-digit growth is what they have seen coming in for ITC's FMCG business, which is the non-cigarette business of the company. Even the cigarette business of the company, which accounts to most of their revenues, that has also seen a very strong, resilient growth over the last few quarters as well. And it's expected to see this resilient growth going forward. Volume growth for cigarette business is expected to do well as well, even in Q4 and even going forward as well. Hotels business, that has also seen an accelerated growth. The paperboard business, other businesses of ITC are also seeing a good traction, a good growth coming in there as well. Now, in terms of, let's just talk about the commodity prices. That was a big point and impact point for FMCG companies. Softening of commodity prices will work out well, obviously, for ITC as well. The major point that we should always highlight is, during the budget time, we always pick out on taxation. And why does ITC always see a move in terms of on the budget day? Mainly is because of taxation. So when there's an increase in the tax rates for any of these sin products that you talk about, that obviously impacts the companies as well. And ITC, in terms of the taxes that change, which is applied for cigarettes, that impacts ITC. But in the last 5 years, we have seen there is a stable taxation that has come in, and obviously that does put in a curb on the illicit cigarettes as well. So yes, stable taxation is another positive point that we should be highlighting as well. And in a recent interview, the ITC management they had with Economic Times, they did highlight that they're looking at an alternate structure. This is for the hotel business in the next 2 quarters. So everyone's going to be keeping an eye out on, how does this actually turn out? What will be this alternate structure? That's a factor to keep an eye out on as well. And valuations, we've spoken about it time and again. ITC's valuations are very cheap compared to other FMCG players. It's somewhere around the 25-28 times FY24 forward PE that we're looking at. So very cheap compared to its peers like an HUL, a Nestle, a Britannia, Marico. So cheap, attractive valuations also is what is playing out for ITC as well. Just let me highlight a few risks also that are there for ITC. Slowdown in demand is a big concern that could come out for any of the companies and even for ITC. Rural demand continues to be soft as well, and weakness in rural demand is a factor that could come into play for ITC. Lastly, government policy changes, anything on those terms on tobacco products, consumption, that is a factor that could impact ITC negatively. Now, is this 400 level still quite attractive? Let's just look at that as well. Now, what analysts are saying when we spoke to them is that, they believe that the margin recovery perspective for FY24 for ITC is quite good, whether you look at it in terms of the cigarette business or the FMCG business as well. They expect ITC to be doing well even in the year of FY24, where the cigarette FMCG business overall, the growth is expected to be strong. They believe that ITC still is quite attractive as well in the FMCG space, and that is what is the word coming in from a few of the analysts that we spoke to. So ITC still looks attractive to few of the analysts on the street. 400 is what ITC is standing at, still looking attractive.
If you like this video, then like, share and subscribe to ET Now.